The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, today we're back with Mike Neuder, good friend of the show. Also, one of the Ethereum people we love talking to. Mike, you can quickly introduce yourself. Everybody should know who you are, but welcome.
Yeah, thanks for having me. Good to be back. Yeah, I'm Mike Neuder, work at the EF on, I guess, like MEV research generally. Have been writing a lot about staking and I guess market structure stuff generally around Ethereum. So that's me.
How do you feel like the vibes are right now? Just the vibes in Ethereum. Well, actually, let me give you a little bit more specific question. Are the vibes on crypto Twitter kind of representative or very representative of the vibes from the people who are working on this on a daily basis? Like, how would you compare the two? And then you can describe just the vibes in general.
Yeah, I would say there's certainly a disconnect between the two. The vibes on Twitter are like, by definition, going to be way like more condensed, way more cynical, usually like pushes people to kind of just throw their opinions out left and right. Whereas like people who are kind of in the software community or like in the core dev community are usually a little more measured and like take time to think and respond to these types of things. But I would say, and I think it's worth kind of pointing out that I do think the narrative follows price in a lot of ways. And so like the price of ETH being down just like makes it really easy to dunk on in a way that like it wouldn't be if ETH was like, you know, matching Bitcoin's price action or whatever. But like there's correlation here, obviously, like they're not totally independent. So yeah, I would say that in terms of, I guess, what the source of some of this consternation feels like it's mostly, I think, around kind of a lack of North Star or a lack of kind of large, big picture vision for what's next for Ethereum. In a lot of ways, I think all of the hard forks up until this point have been kind of like pretty cut and dry and pretty straightforward. Like if you start from the beacon chain, right? Like this is like October through December of 2020 is like right when the beacon chain was launching. All the way from there, it was like you do beacon chain launch, then you do like a practice hard fork, then you do the merge, then post merge it's withdrawals, and then post withdrawals it's 4844. You know what I mean? And so like every hard fork had this like clear cut, this is the most important part of the hard fork, and everyone was marching in unison towards that thing. And I think that really helps like the narrative on Twitter too, because everyone's just like, yeah, we're doing the merge, we're doing 4844, like it's very clear. I think post 4844, it was kind of like, you know, like that cartoon where you drive off the cliff and then like you're sitting in the air and everyone's looking around like, what's the next thing? You know, like what's the next thing on the roadmap? And, you know, the roadmap has like fragmented in a massive way so that everyone kind of sees what they want in it. And then it became a lot less clear what the immediate next step was for Ethereum as a whole. You know, some people are saying like we should go all in on like scaling blobs, like keep going on the roll-up-centric roadmap. I was like personally advocating very heavily for like censorship resistant stuff at the beginning of the year. Like we should do inclusion lists. We should kind of like double down on that. Max and kind of, I would say most of the like Twitter kind of countercultural takes are mostly about like scaling the L1. Countercultural. Depends who your culture is. But so yeah, I think that's part of why the vibe feels sort of negative. It's because like not everyone agrees on what the right priorities are, and there's no clear like obvious next thing that Ethereum should be building towards. And this is actually like reflected in like the actual planning around Pectra, right? So Pectra is the next hard fork that comes after 4844. So 4844 was in April of this year, right? So it's already been 6 months. Like the time has passed, and like we were doing Pectra planning at the beginning of the year, like kind of like everyone's throwing out EIPs. There's like a sort of Keynesian beauty contest lobbying process that goes around in terms of like everyone deciding what they're going to signal support for or not. and this was like January through March of 2024, and now we're in October, and like Pectra still isn't like totally finalized. It's like 10 months have passed, and it's still like new things are getting proposed. Proposals are getting removed. Pectra actually got split into 2 different hard forks. Like they're calling it Pectra A and Pectra B. Pectra A probably won't actually happen until like maybe at the best like end of Q1 2025. And so like just in terms of timing here, I think that's what people are starting to recognize. It's like these things are taking a really long time, and I think that is part of why the sentiment, especially on Twitter, is like so negative.
Yeah. Okay. I know I'm not asking you to speak on behalf of the entire Ethereum Foundation, obviously, but you do work for the Ethereum Foundation. So how do you feel specifically the cohesiveness of direction is within the EF? Like amongst the people who work for the EF, do they all seem to generally agree? And once again, I'm like, I will get to my opportunity to screech, but I won't do this right now. What I'm asking is
screeching later.
Yeah. I'm not trying to be like, I'm not trying to condemn the EF right now. I'm just asking, like, do you feel like there is a, do you guys all feel like you're on the same page, at least in the EF, or no?
I would say there's very, people at the EF are like super independent in their thinking generally. And there's no like internal, part of the whole Ethereum project is like doing all the work in the open. So there's no like internal calls where we're all just like, okay, Justin, what do you think? Okay, Doncred, you know what I mean? There's nothing that kind of like would be the normal like corporate way of like aligning the vision of the people who work at a company. And I think actually if you look at the AMA, so there's like this EF research AMA that they do on Reddit. They did it in like September. And I think on there, you can see like some pretty different views for some parts of the roadmap. I think everyone like generally agrees that the rollup centric roadmap still makes sense. Like that's kind of the guiding framework for most of the decision-making processes. I think there's probably more disagreement on the minutia of the details. Like for example, Justin is a big advocate of like this cross-chain pre-conf world where you have like multiple, you kind of try and solve the interop problem by having multiple based rollups that all like are sequenced by the L1 validators, for example. And I think that vision is much less a priority of like, for example, Barnaby and the rig team, who are focused more on like, hey, we should make sure to figure out staking economics. You know what I mean? But I don't know if it's like a fundamental disagreement, more so just like people have their specializations in their lanes that they're kind of like, this feels like the most important thing. And there's no like, not everyone agrees that one thing is the most important thing. You know what I mean? So yeah, that's what I would say. I also think people do over-index on just the EF as a group. Like it really does operate very much like a group of independent researchers, and people are like, even Kyle, when he came on your show, he was basically like, I don't believe that the EF will be able to like operationalize and like go into war mode and like these types of things. And like, I totally agree with him, but that's like not really what the EF was ever trying to do. You know what I mean? It's never trying to operate like that. And power is really meaningfully decentralized. Like the core dev teams are like way bigger than the EF and have like much bigger influence on the actual process of like getting EIPs into the protocol and stuff. So yeah, that's what I'll say. I'll also say like there is some like restructuring going on. I think people probably saw, but like Barry Whitehat stepped down from PSE. Danny Ryan, who was the kind of one of the core pillars who led the whole merge effort, like he stepped down. So I think, there is some like internal housekeeping that's happening in order to like restructure and figure out what the org will look like. But yeah, I don't think viewing it as like a team that needs to have one clear vision is the right framework in the first place. Yeah,
I think that Kyle definitely has this view of a small group of people need to ship, right? And that's just a different perspective. And
it's a different model. Yeah.
Yeah. And I don't fault Ethereum for shipping the way it has. I mean, not that I would fault them anyway. Like it's not that offensive to me that how quickly they ship, but I'm saying like, it's a different perspective, right? It's a different model. So I do tend to agree with you there. I guess one thing I would say is that Max and Max's kind of push to make the L1 great again. I don't know if this is just me in the echo chamber that is crypto Twitter and not really looking outward, but I will say that this is maybe the first non-EF campaign that I've seen in a while that seems to have got some traction in terms of, like, I guess mostly what I'm saying is, like, most of these proposals and ideas have generally come out of the EF from what I can tell, or were more aligned with the EF's vision. And I do think that maybe what Max is proposing seems like a little bit potentially in the other direction. Like, would you agree with that? That is like maybe a little bit unique, at least as of late.
Yeah, I don't have the full historical context here because I've only been in full time in the space for like a year and a half. But like, I do think it does. It's certainly different from anything I've seen, and I actually think it's really good. Like, if it wasn't there, like the counterfactual of having everyone just kind of like blindly marching in one direction, it seems like objectively worse. Obviously, it like makes for like a more dramatic crypto Twitter experience.
Yeah.
But I actually do think it's good. And one kind of interesting thing about it is he actually has some supporters. Like, I think this is actually a good demonstration of the fact that like the EF doesn't have a monopoly over like the decisions that are made about Ethereum, right? Like, he has some supporters that are like people proposing, blob increases from core dev teams. There's people like proposing raising the gas limit or like shortening slot times. Like, these things are some of the kind of vision that he's putting out there is actually like finding traction with core dev teams that aren't necessarily like the EF. And I think even people within the EF are like pretty supportive of some of his vision. Like, there was the most recent one is this EIP called 7782. And it's like a very simple proposal. It just says shorten Ethereum slots to 8 seconds. Like, just they're 12 seconds now, just make them 8 seconds. Shift everything, compress all of the sub slot durations by a factor of a third. And Justin was the first comment on the EIP, and he said basically like, yeah, I support this. I think it's good for XYZ reason. And like, clearly that I don't think that EIP would have like had the reception that it has now if not for Max like kind of seeding the way with his messaging on Twitter. Like, I think his approach to communicating is like what rubs people the wrong way. I don't think it's actually the message that pisses people off. So
yeah, I think, well, he's a bit brazen. I think this is obviously by design, and he's a friend of both of ours. So I mean, he knows what we're going to say about it, but it's clearly there's some theatrics involved, which may be necessary in order to kind of rile the people up. One thing I would say about Max, though, is I would say with regards to like some of the stagnation or some of the complaints with regards to Ethereum development prior to Max, it was a bunch of people like me who don't write code and just screech on Twitter, right? And just prod and troll all day. And Max comes with, look, I'm going to write the code. I'm going to show you. We're gonna propose it in the flesh, and so there's more like legitimacy to that. The one thing I would say, however, is Max has been fairly direct in saying that the rollup roadmap was a grave mistake. He thinks that they are siphoning all of the value away from Ethereum, and that is, I think, you can sort of try to gloss over this and say, well, we can do both, right? But like, he is taking a stand with saying rollups are a massive mistake, execution going to L2s are parasitic. And so I think that is something that I would say is pretty direct. And I don't know what maybe we can like sort of move on now to, but like, what are your like general thoughts on that? I heard you recently, I guess, talk about rollups and be still pretty positive on that roadmap. So maybe that's the context.
Yeah, no, I think it's totally true that what Max is proposing is a pivot from the kind of core rollup centric roadmap as it was originally proposed. I think everyone can agree on that. In terms of like, is that the correct like strategic decision for Ethereum? I think he argues yes, and fundamentally, what it feels like it boils down to is the operative question of where does DeFi happen? And like, if you want DeFi to happen on the L1, then you have to pivot from the rollup centric roadmap because you suddenly become effectively like competitive for users with the rollups, right? It's like no longer are we telling all users and all liquidity and all apps to be deployed on the L2. We're saying actually we want like some of the important stuff to happen on the L1. Like I think Max uses the kind of analogy of like, oh, all DeFi happens on L1 and all the gaming stuff can happen on the L2s. But that's like a very, very different conception of the rollup centric roadmap than what has been originally proposed. So yeah, I think it's definitely worth exploring. You know, I wrote this article, and like I think part of the motivation for us to talk was the article, which was kind of saying, hey, I think Ethereum should prioritize settlement, DA, and execution in that order. And you know, I still do think that's true, but I think it's also potentially worth considering doing like settlement, execution, and then DA potentially. And we can maybe go into that a little more detail, but like, yeah, I guess the key question here is like, if we're actually trying to say that we want ETH, the asset, to kind of behave more like a capital asset, to have yield, kind of to have some more like clear story for value accrual and value capture, then like you're going to need to have the important transactions take place on the L1. Like pushing them to the L2 is going to fundamentally lead to like a market structure where like the L2s are capturing like a ton of the value. Now, I think it's maybe what's not clear at all to me is whether like you can actually meaningfully capture any value at an L1 period. You know what I mean? Like Solana folks would like to tell you that Solana as a chain will like capture a bunch of value through the MEV and stuff just by providing like, you know, a monolithic state that everyone wants access to, for example. But yeah, it's not obvious to me that the validators of Solana are going to be able to actually like capture that value themselves. And if they can't capture the value, then it's kind of equivalent. Like if the apps capture the value, it's the equivalent to L2's capturing the value in Ethereum, right? Yeah. It's like someone other than the base chain is getting paid here. So yeah, I think if we did decide to do something like a big pivot to say, hey, we want DeFi execution to remain on the L1, then we'd have to have a really clear story for why we think that value capture is sticky enough or like worth chasing in a meaningful way. You know what I mean? Because it would be a huge departure, and it also would kind of directly be at odds with the rollups as they exist today, because like it would be asking them to give their users back effectively, which is not totally clear how that would go over.
Max is very smart, and he has generally good ideas. Multiple concurrent proposers may be worth doing just for, I don't know, maybe you could speak more to this, the censorship resistant qualities of taking away the 12-second monopoly that block builders have. I don't know. But I guess the point is, and this is a question I want to ask quite directly. Max says, we saw that Solana is eating our lunch. Do you agree with this? Like he said this, right? I'm inclined to think you probably disagree, but like, what do you think about that statement?
Right. I mean, it's hard. I do think probably, well, okay. First of all, I'll caveat this by saying I haven't been in the space long enough to know like what the other historical quote unquote competitor ecosystems to Ethereum looked like at the time, and how it felt to be like an Ethereum person in, you know, in 2018 or whatever. But I will say, to me, at this moment, it feels pretty obvious that Solana is the most clear and like legitimate competitor that Ethereum has ever had. And it doesn't feel like the right move to just pretend like they don't exist and say like, oh, we're doing our thing. Yeah. Like we're in our own lane. We're like, they're doing something that we can ignore them because it doesn't matter, because like they are attracting users. They are attracting developers. Like in John's post, he had, John's recent post about L2 and L1 token accrual. He has like plots showing just like how much transaction fees and MEV are being extracted from like Ethereum and Solana right now. And it's like about even, like they're both about $1 billion a year, like annualized. And so I think pretending like Solana doesn't exist certainly does not seem like the correct approach. So in that regard, I do think paying attention to what they're doing and seeing what technology they're building and what can be like adopted for Ethereum does make sense. Now, on the other side, I don't think trying to directly compete like pound for pound with Solana makes sense in terms of execution. Like that's just obviously not going to happen in terms of scaling and like hardware requirements and solo staking, like that's all like baked into the DNA of Ethereum, and I don't think that should change. But the question kind of becomes like, okay, given we do think that we need to do more to attract users and like retain users in the Ethereum ecosystem, like what's the right way to do that? Like you could kind of view the L2s, and I think part of the new batch of L2s that are rolling out is kind of in response to Solana, right? It's like Mega ETH and Atlas, and like people are trying to compete at the like real time level or whatever that means, like at max throughput, high speed chain, but through the Ethereum L2s. So in that world, it's kind of like, okay, maybe Ethereum does acknowledge that a lot of users and a lot of activity is happening on Solana now, but the right way of competing is not by trying to like juice up the L1, but it's actually like by leaning all the way into the DA thing and saying, okay, we actually want the L2s to compete pound for pound with Solana in terms of like user execution and stuff like that. So yeah, this is kind of a rambling answer, but I guess I do think it's clear that Solana is doing something very well, and like the relentless focus on like apps and users and making something that people actually care to interact with feels like a big lesson for Ethereum people generally. And it's like I don't see it as something to ignore by any means.
I guess we like kind of move on now a little bit to the ETH is money shill. What is your model then for like the long-term equilibrium, I guess, of settlement, DA, execution? Like, what does this look like in an idealized Mike's head?
Yeah, it's a super good question. So one thing that's worth saying is I have kind of changed my opinion. Like originally I was like, oh, DA feels like it will be network effects, like sticky type of thing. But I think my view on that has meaningfully shifted. And like I've just thinking more about it, talking to like a few roll-up teams and stuff. I don't think DA is going to be like that meaningfully sticky, right? So what I mean here is if it gets to the point where like base users have to pay more than 1 cent per transaction because base, the sequencer, has to post its DA to Ethereum and Ethereum blobs are too expensive, then I think base will become a Validium, meaning like they're going to post their data somewhere else. You know what I mean? Like I just think the kind of network effects are far too weak right now to be able to charge like a premium for Ethereum blob space. Now, that being said, I do think there is some kind of nice engineering reasons why it's nicer just to post to Ethereum. Like you don't have to think about fraud proofs, like reorging on the other chain, like all of these kind of weird mechanics. Yeah. So I do think if Ethereum DA is cheap enough, then people will use it. And I actually did the math. It's kind of interesting. If you look at the amount of ETH staked today, it's about like 34 million ETH. And at that amount of stake, it's approximately 3% issuance per year, like a 3% yield on each ETH staked. So what that means is there's 1 million new ETH per year, right? So this is kind of like the inflation side of the supply. If you just think about DA as like trying to offset the inflation, like let's just say we want enough DA, like we need DA to pay enough fees to offset that 1 million new ETH worth of tokens, then effectively you can, if you scale to full dank sharding and you fill up all the blobs, assuming like a kind of normal amount of transactions per blob, means that the transactions will still be sub-cent. So all of this is to say, like, you could still have a world where the net supply of ETH is like barely inflationary or even like flat. And transactions that do use Ethereum DA are still like sub-cent. So that is possible, but it relies on like both a huge amount of demand for blob space, and it relies on like scaling Ethereum blobs to keep their average like price point like very low. You know what I mean? So it's like, yeah, in that world, I think it's worth acknowledging that like if Ethereum blobs can't scale fast enough to meet the demand, then I do think people would move elsewhere. So that's kind of the DA portion of it. In terms of, I guess, ETH as money apart from the DA, right? Like ETH as a unit of account, medium of exchange type, monetary asset in the L2s. I do think there is some stickiness to that. It's not totally clear, like these things are hard to argue because it's very difficult to like put a price on what it means to have like a monetary premium. But for example, I think users of the L2 would be far more likely to want to hold ETH than they would be to want to hold like the native L2 token, for example, just because like the asset itself is like, has better distribution. They like have reason to believe that it'll have like long-term value rather than like some random governance L2 token. So I think like using ETH as kind of the native asset of the L2s, like I think L2s do that both for Ethereum alignment, but also because they know that there's like L2 user demand for ETH on the L2, So I think there is a lot of value there. But it's potentially like a riskier bet, right? If you put all your chips on the ETH as a monetary asset, if you go all in on that, if people decide it's not, like you're kind of betting on this moneyness argument, and it's a much softer argument to make than just to say like, here's how much fees it earns, and like, you can price this with a DCF thing, like normal capital assets. So yeah, I think that's kind of my big picture view. Yeah, I guess I'm curious, what do you like on the Bitcoin side? I think Bitcoin's very clearly like positioned, and the story around it is like this non-sovereign store of value. It's like digital gold, it's pet rock, etc. Do you think Bitcoin will be the only crypto asset to actually like accrue this kind of moneyness meme? Or do you think like it's possible that another asset could have that same kind of premium for like occupy a similar space in the economy, but still have like some more utility in the L2 ecosystem and still have like broader reach than Bitcoin itself?
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Yeah, I don't know if my opinion has changed or I've just added more reading or lecture watching or whatever, but I am increasingly convinced that, okay, I won't even just say Bitcoin, but I'm pretty certain that the value, like the sustainable value mechanism for digital assets is store of value. Like I became more and more convinced of this. And I actually said this, I didn't really flesh this out, but I said this to Kyle Samani last week. I was saying to him, I think ironically, and I'm not saying that this is certainly not going to work out for Ethereum, but I actually think that the ultrasound money meme, as much as it's gotten some pushback and criticism as of late, it may honestly be the best chance ETH has at achieving this monetary premium. Because when you look at the utility values, especially, and I will segment this for a second and leave out Bitcoin, but when you look at the utility values of these L1 smart contract tokens, they already trade at a very high premium.
Yeah.
Now, whether or not that's a monetary premium or just some premium, right? Like, totally argues there's no such thing as a monetary premium. I promise you, Sol is trading at some monetary premium. Now, is it monetary or is it just a premium? It's a premium. I can tell you this, right?
It's ADX earnings or whatever.
Yeah, exactly. But even if you were to do like an MV equals PQ with these things, you find a utility value. I was actually messing around with ChatGPT the other day, and you find utility value of ETH at probably 1/10, which is in terms of gold, that's actually a reasonable kind of ratio, right? Like the utility value of ETH is probably around $300, $400. Now, this is also pre-scaling, I would say, if that makes sense. Like this is if you ascribe to the belief that the marginal cost of fees goes to zero, then it becomes increasingly difficult to argue for the values of these, like the utility values of these to be high at all. This is honestly, like we were talking about John Charbonneau's piece, right? Like this is where I think he kind of like stop short, right? And I think he doesn't want to piss the community off too much. Like there is an extreme logical conclusion with a lot of these L1, utility tokens where it goes to its utility value, right? And that's not exactly what you want. So anyways, circling back, I was saying the ultrasound money idea is, I don't think it's that, like, I will troll it maybe because I'm a Bitcoiner and I think it realized very much the degree to which you need this store of value narrative. Yeah. But the utility values of these things are, in my opinion, negligible to irrelevant. Yeah. When you think of value in this stuff. So, I mean, I'm not going to go on a whole Bitcoin show here. I think that you probably know my beliefs regarding it. But I guess the one thing that I would say is like Bitcoin has taken this kind of bottom-up approach of first and foremost being a store of value, right? You look at gold, you look at wampum shells, they came about as collectibles, and then eventually they were viewed as a store of value long enough such that people would begin to transact in them. They were considered hard money in some capacity, right? So I think that, Ethereum started out as this kind of, nebulous money, but it wasn't as nearly the kind of campaign that was put on with the ultrasound money. Bitcoin kind of came from it as this is for, and also there's some aspects to this with the block size wars, right? With how they wanted it to be digital cash, and we're saying, look, no, this is a non-sovereign store of value. Yeah, good. I'm glad you're reading that. First and foremost is a non-sovereign store of value, and it needs to go through this period of being considered valuable first and foremost. So, those are my thoughts. I will say though, like just one more time to reiterate, like store of value is, to me, the only thing that really matters.
Interesting.
So I don't know. Yeah, go ahead.
In terms of, just to kind of push back on one point or kind of follow up question. So for ultrasound money, the meme, do you think that relies on ETH being net deflationary, or more just pitching it as Ethereum has like a very low issuance compared to other proof of stake tokens, for example, but it still has a monetary policy that like makes sense in the long term versus Bitcoins? Like does ultrasound money depend on actual kind of like zero or net deflationary kind of medium term behavior for the supply, or is it more about just like drawing people's attention to the kind of overall rate of inflation?
Let me think of how to say this. On a relative basis, for example, like a lower, or rather a higher like stock to flow, for example, is better than something with a low stock to flow. So like Ethereum could be considered better money than the US dollar, or, and so in relation, or Sol right now, right? Like obviously like Sol's inflating much more than Ethereum. I don't know. I guess it's hard for me to think of a future where there's not likely to be one store of value, just because I think that the incentives to sort of aggregate around a single non-sovereign monetary store of value are quite high, right? We see this with gold, for example. So I don't know. I don't think that. See, the problem is okay. So the problem is if Ethereum is net positive issuance, right? This subsidizes the cost of running validators effectively. All right. When you subsidize the cost, do you disagree? It is. Go ahead.
Well, it's a redistribution, but I don't think that depends necessarily. Like whether or not ETH is inflationary or deflationary, there is still a redistribution of total supply from stakers or from non-stakers to stakers. Like either way, that kind of redistribution happens. So I don't see it necessarily as a subsidization or subsidy as much as just like it controls the rate at which the redistribution happens.
When you say ETH is money, do you think you're talking about ETH or staked ETH? There is a difference here, right? Like when if you're trying to compare Bitcoin and Ethereum, if you told me Steth, like Lido staked ETH or something, I would say, okay, that's a reasonable analogy, right? But you, for example, like you would never hold $100,000 worth of ETH unstaked for 10 years, right? If you viewed it as a long-term store of value, you're never going to not have it staked for an extended period of time. Just like Americans aren't going to hoard $1 million in cash in their basement instead of putting them at least in T-bills, right? Like, would you agree with that? So when I hear ETH is money, I'm like, okay, hang on now. Are you talking about staked ETH or are you talking about ETH, right? Because go ahead, but I'll tell you why I think this is important. So go ahead.
I agree with you that, well, maybe it's not so clear, because if you hold a liquid staking token or if you solo stake yourself, you do take counterparty risk. And I think you can view the issuance as more like a risk adjusted, return on capital versus just like, hey, I'm holding ETH unstaked. I kind of view my inflation as kind of like the network tax for holding and like securing the value here, which is kind of like the Bitcoin version, right? Like you can't stake Bitcoin until Babylon. And so like what you're effectively saying is I'm willing to accept the diminishing inflation because I'm storing my Bitcoin in this network, and like I'm trying to pay for the value that I derive from storing it here. You know what I mean?
Yeah. Okay. I agree with you, and we're not two on different pages. There's two things about Bitcoin. One, the 21 million, whether or not you agree with that, okay, but the 21 million right now, that does matter, right? Because and this kind of goes to like the being inflated away. Like when you buy Bitcoin, you keep your relative stake in the like as a percentage of the total Bitcoin. You always have that amount, right? It's whatever your amount over 21 million. So that would be the only difference that I would say. And like, this isn't necessarily a condemnation of the, ETH staking or unstaked ETH. It's more just that I would never hold a large amount of ETH unstaked, right? So like that was really kind of my only point.
Because there is this like natural interest rate that you can get by just staking it.
Yeah. I mean, also it's just because you don't know if like the amount of inflation, like you want to just protect yourself from being diluted, right? So I know you guys don't like the word diluted.
The inflation is going to be pretty low, but there is some uncertainty.
Okay, so where were we? Exporting ETH, the asset. I guess a lot of I want to ask you something. This kind of now we can kind of like loop this back into some Bitcoin talk as well. I wanted to ask you something because I was thinking about this the other day. I think a lot of Ethereum's value proposition is this idea that if Ethereum sells premium block space, do you think that Bitcoin sells premium block space? This is a little bit of a loaded question, but I want to know just if you think that Bitcoin sells premium block space.
So I guess there's a few things to say here. When people use it in the Ethereum context, I think they usually refer to the sum of the L1 block space and the rollup block space, right? So people often say like Ethereum rollups, or I guess Ethereum DA extends Ethereum's block space to L2s in a trustless, like minimal risk, high security way. Versus I think when people talk about Bitcoin block space, they're almost always just talking about Bitcoin, the L1, right?
Yeah, that's fine.
So that's maybe an important distinction. I will say it does seem like, well, okay, yeah. Another part of this story here is if you actually think about kind of the core promise of what Ethereum security gives to L2s, I view it fundamentally as the L2s rely on Ethereum for property rights for the assets that's like held in the bridge, and for
robot property rights.
But effectively like the censorship resistance that comes along with having an actually decentralized base chain. So those two things actually don't require Ethereum DA to imbue those assets with the L2 assets with those properties. So if you could build on Bitcoin, like kind of walk with me through this thought experiment. But if you can build on Bitcoin the same level of like forced inclusion mechanism for L2 transactions that are getting censored by some L2 sequencer, and you have like strong beliefs about the censorship resistance of Bitcoin block space itself, then I do think in a lot of ways the block space that Ethereum and Bitcoin could export to the L2s are like similar in terms of like security properties that they give those assets. Now, if you subscribe to that view of the world, then maybe you could also call Bitcoin's block space a union of the Bitcoin L1 and all of the Bitcoin L2s. But maybe this is like a bit of a semantic point. I will say I think Bitcoin blocks right now have very strong settlement assurances, meaning it's going to be very difficult to like reorg a block off the chain, especially after whatever four or five confirmations.
Yeah.
However, I don't like my biggest gripe with Bitcoin right now is the 21 million promise, right? Like you said, this is like a huge part of the story of Bitcoin is this 21 million thing. And like in this book, I'm reading Block Size War, it's all over in the book that like you can like argue about the block size, you can argue about SegWit, you can argue about OpCat, but no one's legitimately arguing about like increasing 21 million supply, right? So kind of given that, the long-term security of Bitcoin block space is in question in my mind. Like there is, this is a very old argument, which is when the block subsidy goes to zero, like how do you have settlement assurances for those transactions? Because suddenly the miners don't have incentives to mine honestly anymore because the blocks that they produce are valueless except for the transactions that they contain. So I think that's I guess I am curious to hear your response to that. I'll say one kind of recent thing. I'm working on a project that is studying basically selfish mining, this kind of property of a way miners can try and steal transactions or block rewards from each other. And in particular, we're studying it under the presence of very high volatility transaction fees, right? So when Babylon launched, like I think it was August or September of this year, over the course of 3 Bitcoin blocks, the transaction fee revenue for the block went from 0.03 Bitcoin to 15.5, which is a literal 500x in the value of a block, right? And at 15.5, that's 5x larger than a block subsidy of, the current block reward is 3.125. So in that world, a rational miner might actually be worth, it might be worth them losing 4 blocks to try and steal some of those transaction fees for themselves. On a competitive fork from the first chain that like found the original block. So yeah, I guess the reason I'm bringing this example up specifically is because it feels like up until this point, the argument about like trying to steal transaction fees from other miners didn't really hold that much water because there just wasn't that much transaction fee volume generally on Bitcoin. But under these new protocols, like if there's lots of runes, if there's lots of like launches of protocols and stuff like that, the stability of the fork choice rule that as it exists today doesn't seem as cut and dry, especially if the block reward is down at like 1.75, like in a few years, or goes below that, like in the farther future. So just curious your thoughts there.
I mean, I think Bitcoin is entirely dependent on demand. This like Ethereum has not solved this by having tail emissions. It's not like some miraculous cure. It's just a different approach, right? There will always be some subsidy. It doesn't have like either way. These systems are reliant upon demand. The rational response is, well, if Bitcoin in 10 years does not have sufficient demand to not incentivize miners to constantly reorg the chain, then it has failed. It has failed because demand and I know
but
this.
This is at odds. This is at odds for it, right? Like,
what do you mean?
The store of earlier you were saying Bitcoin is, and the thing that to price it as is a store of value, right? Like store of value assets, you don't generate like enough transaction fees to support the network just by like having a store of value asset, right? Like it just sits there. You're not doing anything with it.
No, I don't. I think that there will still be like there needs to be increasing demand. I mean, just as there's demand for settling gold. Now it doesn't settle physically, but there's still a ton of gold trading every day, right? It's not entirely dissimilar. I really do think like if there's a future in which Bitcoin is at risk of being constantly reorged, then it has failed. Like we assume very, very high transaction fees in the future for Bitcoin mining. And I'm fully willing to accept that it fails. To your point about 21 million, like this is the one thing. In fact, if I'm not mistaken, this is the one thing that Satoshi had in the original. He talked about a fixed supply, and then in the original spec, obviously he put in 21 million. Like to me, this is the only thing that makes Bitcoin. And if there is a Bitcoin that has tail 100%. Emissions, then it's not Bitcoin. That's fine. Maybe the real Bitcoin fails, but to me, the thing that you're talking about that has tail emissions, this is not Bitcoin. Now, coming quickly back, there's a paper, I'm sure you've read it. I think Harry Kolodner wrote it. Bitcoin's not secure without a subsidy.
It's Matt Weinberg and Carlston. But yeah, that's who I'm working with on this follow-up paper.
Okay, so I think that this paper, and this is a lot of like what I hear referenced, this paper assumes that there is always sufficient space in blocks to include all transactions. And if so, essentially it's saying there's an unbounded block size. This makes a very big difference in terms of the incentives to reorg, right? Because if you have a large mempool of transactions and you can only fit a certain number in block, it's much more risky to try to reorg, mine on another chain in order to fork that out than it is to just move on with the next batch of transactions in the mempool and so on and so forth. So I would just point that out because I often see that paper referenced, and that's like...
the model doesn't depend on that though. Our version of the paper won't depend on it.
What is? Why are you doing this? Bitcoin FUD. That's why you've been sentenced by Justin Drake to provide Bitcoin FUD. But go ahead.
No, I wish I like had that long term of Machiavellian plan, but I just think it's an interesting problem. So basically, the model here is much simpler than the one. Well, okay, it kind of extends the original model of Matt's paper, but what it includes is this effectively like a coin flip that happens on each block. And you flip a coin to determine like if this block has like a giant transaction fee paying transaction in it, like just one. So we're not saying like you have to scale the block size infinitely. It's just like one single transaction that either shows up or not. And this is kind of our mathematical tool that we use to model the like Babylon equivalent of a block, like a single block having a transaction fee that pays like 5 Bitcoin or something like that. And in that world, the reorg kind of incentives are there because only a single person gets to include that 5 Bitcoin transaction. And, even if you're like looking at the mempool and there's still like sufficient, tons of low paying transactions in the mempool, it still might be worth it for you to try and to build on a previous block and get that 5 Bitcoin one. So
it does. Okay. The assumption that I'm just going to stick with, okay, is that there's high transaction fees in the future, and there isn't that much in the way of 1 Bitcoin blocks and then 20 Bitcoin blocks and then 50 Bitcoin blocks and then back to 1 Bitcoin blocks. That's just not the assumption. Yeah. So like that is generally the model. I think I find this stuff interesting, okay, and I don't fault you for working on it and try to FUD.
No, it's not trying to FUD.
Well, it's kind of like Bitcoin just kind of lives by the sword, dies by the sword. It's like, dude, there's 21 million. If it doesn't work out, it doesn't work out. We tried. Maybe it's not possible, but it is what it is. Like the security budget, like it's all. It's been talked about since. Like you can go and read Satoshi's discussions on this. So I just like I'm very reluctant to all of a sudden be like, oh, dude, this guy's figured something out. Like we got something new here. Like I'm very like I'm skeptical. But anyways, I'm excited to read your paper. What do you think about the fact that Ethereum's security budget has declined 20% due to the price of ETHs, despite an increase in stake rate? You have anything to say about this?
So hilarious. Yeah, I would say in general, like, I don't know how tongue-in-cheek that question actually was, but I'll dignify it with like a somewhat of an answer, which is, I agree with John's post in that I think economic security, like beyond some certain threshold, is kind of, there's like very low marginal utility for increased economic security. So like whatever level we're at now is just like so high that a 20% decrease just simply doesn't matter. Further, beyond that, like economic security is mostly denominated in delegated stake, which is like probably the wrong thing to be considering, because there's this principal agent problem where like if I stake, let's say I have like 100 grand and I stake it with Coinbase. Coinbase's actual like security here is both like, or the amount that they like stand to lose is the future earnings that they had on that delegated staking, and maybe like the legal risk of doing something that could be perceived as, you know, as pursuable under like some court. And so, yeah, I do kind of agree with him that like economic security as like a raw number is kind of a silly thing to be comparing, or just like looking at on a daily price basis. Like it doesn't feel that critical.
Like I think that I hear obviously totally rip economic security all the time, right? And I think that his explanation generally is with regards to like Circle, and that's reasonable. I think a more
can we double click on that? Like he's saying the economic security doesn't matter because Circle gets to decide where they redeem USDC.
I don't think it's just that. I think it's like Circle runs their own node, and therefore they will follow like everyone running their own node. And this is kind of the point that I was going to make actually. But yes, it's not so much that they're deciding where to redeem. It's more just that everybody's running their own node. And so the actual staked amount behind that isn't important functionally. And this is like kind of leading into the point that I was going to make, which was like, if ETH tomorrow went to $1, okay, just crashed to $1, Lido, Coinbase, Kraken, Binance, as long as they continue to vote for the canonical chain, it doesn't matter if ETH is worth $1 or $3,000. Do you agree with this?
This is effectively John's proof of authority argument, which is like the real value on the line here is kind of the reputation of the entities that are running large validating services. But I feel like this suffers from, like, this feels a bit reductionist, and it falls victim to the tyranny of the majority, which is like, let's say all four of those entities decided to start fully censoring Ethereum blocks, right? Under that situation, you know, like part of the power of proof of stake is that you can actually do like a minority fork, and you say like, hey, if they like are clearly doing this like strong censorship attack where they're like forking off all solo stakers blocks, then like we're gonna like continue the chain on the one that is like not being censored. Now, obviously, like any sort of RWA situation really complicates this, because now there's two versions of the tokens and only one of them can be redeemable. And I think this is normally where people jump in and say like there's an old post from like Hasib and Leland, I think from like 2019, and it's like, Circle, and you know, there can never be another DAO fork because one corporation or a few corporations are going to like decide where the RWAs are redeemable. So yeah, I guess.
Well, I'm not even. I'm okay. So I'm not even saying it as much with regards to that stuff. I'm more saying that their relative stake in the network persists. Their percentage of stake as an aggregate staking set persists at the same amount with ETH at 3,000.
Like they still control.
Exactly. Well, and even you could, but I'm not trying to like make this like it's corporatized, like, you know, it's a captured chain. I'm not even saying that. What I'm saying is that the stakers with the most ETH staked, right? Like discard fiat terms, the ETH staked is what matters. And so the actual value here doesn't really matter as much. Do you see what I'm saying? And this is why my grander point is that I am personally of the opinion that Ethereum could secure a tremendous amount of value and be very useful for some things in the future without ETH having a high price. I'm not saying that matters. I'm not saying that I want the price to go down. I'm just saying It is possible, right? It's like it's the nodes enforcing the economic conditions at the end of the day. And because it's denominated in the native asset, they have their relative portion of votes for the canonical chain.
No, I agree with that. I think where it potentially, to steelman the other side of this argument, it's that if there's a massive disparity between the amount of economic activity on chain and the actual, like, quote unquote, amount of dollar value securing the chain, not ETH value, like dollar value securing the chain, then someone would be incentivized to like manipulate the consensus layer in a way that is like profitable for them, right? Which is just like, if we call the economic security in ETH terms, then someone like has to acquire like 30% of the ETH or whatever. But if that ETH value in USD terms is very low, then that might actually be feasible for someone and profitable for them, right? And like the kind of, I guess, part of the story here for what would potentially happen is when the price of ETH tanks, like the stakers who have the worst margin or who are like the least profitable stakers in dollar terms, because they do have to like put dollars into like running the nodes and like maintaining the software and stuff like that. Those ones will like unstake and potentially sell their ETH, and then that's when like someone else can jump in and like the distribution of ETH in the consensus layer gets kind of reshuffled. So I do think probably both things can be correct. First, economic security as a kind of mimetic thing is over-indexed on by the ecosystem. However, two, it is still an important thing, and like it can't truly go to zero and still secure like a massive amount of value. I think both of those things can be true.
Okay. Reasonable. I wanted to come back though, because the direction you went when I asked if Bitcoin sold premium block space was not really the conversation I wanted to have. So I want to come back for a second. No, because I want to make a point about this. Maybe it's not a good point, but it's a point. Okay. So the reason I say this is because I think a lot of the Ethereum value proposition is this idea that Ethereum sells premium block space. Okay. Now, I'll give you my explanation. You tell me what you think of this. When I think of Bitcoin and Ethereum, from the demand side, we have a pretty simple mechanism. You bid for block space, and when there's a lot of demand, the price goes up. And when there's not as much demand, it's cheaper. Okay. There is genuine scarcity in blocks. I'm not going to get into a whole like whether or not this is real or artificial. I'm just going to make the point that both Ethereum and Bitcoin have scarcity in blocks, right? The point I wanted to make though, so that's on the demand side, right? It's fairly similar. Like in terms of you pay more, you get included in a block. And this is from the user side demanding inclusion. Yep. From the supply side, this is the point I wanted to make. Ethereum claims to sell premium block space. And I was thinking about this with regard to Bitcoin. I don't know that I would say Bitcoin sells premium block space. I'm not sure that's the terminology I would use. The reason I say this is because if you were to chart the value of Bitcoin blocks over the course of its history, and then you were to also chart the marginal cost of mining those blocks over the course of its history, these should, in practice, converge, right? Their marginal profit equals marginal cost. The premium is very, very small because it's like, in practice, more or less a perfectly competitive industry. It's commoditized to the point where miners will mine up to their marginal cost of production, right? I don't know if the same rationale applies with Ethereum. And I think the reason I say this is because post-merge, the cost of computation went down 99%, right? And so how do you sort of justify a premium to block space when you've reduced the price of computation by over 99% to save the polar bears? And my point with saying this is that I think the Ethereum argument is, well, we have the most credibly neutral, decentralized block space, right? And maybe that's functionally true. I would say, like, with smart contract chains, I wouldn't argue with that.
Yep.
Okay. it's still a very, very big premium to marginal cost of production on a per block basis, right? Now, you still have capital costs, right? The cost of capital, which you are compensated for in the form of issuance. If you were to actually look at, this is where ChatGPT comes in handy again. If you're actually to look at the marginal cost, I tried to do this, right? I think you would kind of amortize the cost of the electricity and hardware, right? Electricity is probably very negligible. Maybe you can add in some OpEx like bandwidth. I mean, our friend Ben Edgington is using like, snail's pace internet, but I think that
12 megabits.
This is where this is where I have more of a disconnect between justifying, okay, fees on the L1 are going to be very, very high versus what it actually costs, right, on a per block basis to create a block on Ethereum. And I don't know what your thoughts are. And that's where I think the premium idea has to sell, right? You have to sell this. We sell premium block space. But it's funny because the only point I was making with regards to Bitcoin is like, I don't think Bitcoin sells premium. I think it sells it for a very, very small price over miners' cost of production.
Yeah, it's just the cost of production is super high.
Correct. Price computation, yes.
Yeah, interesting. Because I do think this is exactly the argument that John makes in his post.
Kind of, yeah.
Which is effectively the kind of REV, I think is what he calls it, real economic value of a token, or let's just say like of an ecosystem, is the amount that people are willing to pay to interact with it. So that's like transaction fees and MEV. Let's just call those one thing. And then minus the cost, like the physical meat space cost to produce the blocks, right? And like, as you mentioned, Bitcoin's cost of running those boxes is like many orders of magnitude higher than Ethereum's, just because like that's how proof of work is designed rather than proof of stake. Right. So I'm trying to kind of make sure I follow your line of reasoning here.
You're following so far.
Which is that, okay, you look at Ethereum. Now the price to produce an Ethereum block is effectively, the cost of capital of having the stake, or the cost of acquiring the delegation or whatever. Like getting people to delegate to you, for example. And then the cost of actually like running the proof of stake client, which is like as you said, probably I imagine the most expensive part of this is just hiring someone to set it up, right?
Yeah,
like the actual like
Geek
hardware, actual hardware and software and bandwidth costs are probably negligible, like you said, right? So kind of in this world, how can Ethereum justify charging a high price? Okay, well, maybe where this terminology is a little confusing is I don't think Ethereum says we can get away with charging high fees because the blocks are expensive to produce. I think instead the premium argument comes from the fact that, hey, there's this like a few things. There's very valuable state here. Like this is where a lot of the liquidity is. This is where a lot of the DeFi activity is. This is where the NFTs drop. Second, there's like more demand to interact with this block space than there is supply. And so the premium that you're paying is kind of like the congestion rather than the marginal cost of producing the block itself.
Right.
And so maybe I'm like, I just read John's article and kind of still kind of processing it, but not sure exactly how that squares with what he's saying. But I think
that's perfectly within the bounds of what he's saying. I think that my main point, maybe to the extent that I have a point here, is that this idea of selling a premium block. So maybe we can like loop Solana in here, okay? Like the argument must be, I think, that Ethereum sells much higher quality block space. And I also think this is in many ways why you hear such a push for diversity of the validator set, right? You hear this kind of phraseology used. We want a diverse validator set. We want it to be very decentralized, because that to me is what hopefully going to justify the premium
the cost.
Over. Right. Exactly. Yeah.
So you're saying like if someone's willing to pay 10x transaction fee to interact with Ethereum instead of Solana, there has to be a reason for that. The grounds that Ethereum historically has said is like, this is because you get true property rights, true decentralization, like you're not going to get censored. And maybe also like you have access to state that's more valuable than Solana state.
Correct.
But yeah, whether or not that state is like sticky or not is maybe the natural follow-up question. But yeah, interesting. I think it's true that the Ethereum does have kind of the best properties and the best decentralization, the best censorship resistance. What is not obvious, perhaps, is that users actually like care enough to be willing to pay that premium. Right?
Exactly.
It's like,
See,
do you buy insurance? Like, not really.
Yeah.
Like,
I think Ethereum had a monopoly for the better part of its existence. Ethereum had no real competitor.
Yeah.
It had effectively monopoly pricing power as well. And what's interesting about Solana is that and I'm honestly kind of encouraged to hear you say, like, we shouldn't pretend like Solana doesn't exist. That is something that I see relatively frequently, maybe more than you would like to see on Twitter. A lot of people say, we're not competing with Solana. And it's like, there's all the meme coins, like whether or not it's legitimate financial activity, doesn't matter. They're launching on Solana.
It's activity.
Right?
Yeah.
Right. Exactly. And I think maybe if I had to give a spicy take, I would say that Ethereum had this, like I said, this monopoly for the better part of its existence. It may have sort of misinterpreted its value proposition to some extent in thinking that users wanted these ideals like credible neutrality and decentralization and censorship resistance, and not realizing that that was kind of their only choice. And so this long annoying blog post I wrote was sort of my analogy is kind of like, if you're a luxury car dealer and you sell cars for very expensive, but you're the only luxury car manufacturer, you may think that people are paying a very high price for luxury cars, but really they just need to get from point A to point B.
It's just a car.
It's a car. And this is like, so I'm kind of reducing this down more to its utility function versus some of these ideals that we may have. So I think that the reason I asked about Solana earlier too is because I think it's interesting. I do believe that Solana is the first credible competitor. We had like Avalanche and Cosmos. Cosmos has never been anything but dysfunctional. Avalanche was kind of, up and like straight up, straight down type thing. I don't think that there's really been a credible competitor. And I think that is in many ways what I see happening. And I don't know if you have thoughts on this. I know you said you like haven't been around that long, but it's not to say that you don't have like some insight on this. I just think that this is the first time that Ethereum has really been challenged.
Yeah. I mean, one thing that stuck with me was I was talking with someone about this and I was like, yeah, it doesn't feel like we should be competing with Solana or whatever. And I say we, like the ecosystem, obviously, not me personally, but and they were like, well, Solana's competing with you.
Yeah.
It's kind of like, if that's how, and I do think there's some truth to that, which is, yeah, like we said earlier, if you just head in the sand this, and a lot of people end up just all of the users and developers end up just moving to Solana, then like it could be a really bad outcome for Ethereum. I guess what I would say in terms of this premium thing is it doesn't actually feel like Ethereum is headed in the sand at this. Like for a long time, the whole vision of Ethereum is scaling, right? And the choice on the scaling is maybe what is up for debate now, but it's like from the get-go, everyone was like, okay, we do proof of stake and then we scale the chain, right? And scaling the chain is saying, hey, we're not a luxury good necessarily. We need to be able to be like accessible for everyone to use this block space. And the choice that was made was like, okay, we're going to do this by giving the censorship resistance, giving the credible neutrality, giving kind of the decentralization ethos to L2 transactions as well, and assets that are stored and held on L2s. And so in that regard, I actually don't think what you're saying is at odds with the decisions the ecosystem has made to this point. I I guess the question then becomes like, okay, if you do genuinely like want the L2s to compete, kind of to acquire all the users and to actually have the valuable execution in their ecosystems, then like, can they compete with another L1? Like, which is the better design, And that's kind of this whole like monolithic versus modular trade-off space, which is like Ethereum is going for this modular thing and Solana is going for the monolithic thing. And like, I think the market will probably decide which one it prefers, and people are going to use one or the other, but like both are fighting for the same set of users, both are fighting for the same set of apps. And so maybe that's kind of like just the path that we're on in terms of Ethereum. I think one thing that really matters here in my mind is how the actual market structure of L2s plays out. Like, I think if there is truly like a monopoly, like the total bear case here is Base just ends up winning all of the users because they have like the best distribution channel, they have the most users, they have the app, they have the Coinbase app to onboard people.
They also just started letting people pay in gas and USDC today, which I had a very nice tweet about a week ago. But go ahead. I'd just like to point that out. I predicted this, certainly not some revelation that I had, but yeah, it's funny, like timing wise. But anyways, go on. Yes, regarding Base.
Yeah, just the point I'm trying to make here is if Base wins and it's just Base versus Solana, then actually like the modular version of the world did kind of lose. Like you can have a monolithic winner on the modular stack if Base just acquires all the users, captures all the value, is the top of funnel, and like effectively everyone only interacts with the blockchain ecosystem through Base. You know what I mean? So that to me is like potentially scary. Obviously, the kind of optimistic lens on the rollup centric roadmap is more of like you have a bunch of rollups, you have a bunch of different state, and there's like some good interop between it to hide some of the like annoyances of switching chains for users. But like people having many different rollups is like super additive to just having a monolithic chain with a single state, and that creates value to users and developers that wouldn't be there if they were to deploy on Solana. But yeah, I think that's kind of the trade-off that is being made here.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Unichain. Let's hear it.
Okay, yeah. So I guess I'll caveat this by saying Unichain is like 1 day old in terms of the announcement. So like, I don't think there's that much time to process it, nor is there that much actually written about it. Like the white paper is literally 3 pages in LaTeX. It's a blog post effectively. So that being said, I think a lot of it is super cool. I think the 3 main points, as far as what I've been able to distill from DMARS and from the kind of writing that's out there, is first you have these like flash block things, which I think is directly copying Solana shreds, which is you have like partial block building. You have 1 second blocks, but every quarter of a second, the kind of updated state is broadcasted. This is kind of an interesting model because it's effectively like, I think similar to what Jito does, where they sell like kind of a portion of the block at a time. Jito seems like it just does the top of block, whereas this version is more like you partition the slot into 4 different, blocks that you sell effectively. I don't really get the point of calling the broader thing a block if you have the more granular thing that's also a block. So it's like, sure, you can call it a shred or a block or whatever, but it's just like there is a state update every 250 milliseconds. Like that's functionally your block time. The second piece of it is this whole like verifiable ordering thing, which is possible with TEs. So the way I understand this is you have some code running in the TE, it attests to the fact that it's going to run a priority ordering on the transactions that it receives in those 250 milliseconds. So every quarter of a second, there's like maybe 20 transactions that have landed in the TEE. You order them based on the prio fee, and then you publish the block. So this is kind of like a unique characteristic that's only possible because the only builder is running in a TEE. Like you can't get ordering rule guarantees for Ethereum because there's many people building blocks versus just a single guy. So yeah, I think it's super cool that it's being built. You know, they're clearly trying to iterate on the roll up design space, and I think that's obviously something that is going to become more and more relevant as we move forward, right? You're like, your sponsor of your podcast is building a roll up.
They're going to win. They're going to win because I need them to win.
The podcast won't survive without.
Yeah, exactly.
Ellipsis
desperately need Atlas to work for this to carry on.
But yeah, I mean, I think they're both building very similar things, which is like a DeFi specific chain. You know, like they call Unichain an app chain, but it's really like it's an OP stack chain, right? Like it's not specific to Uniswap. It has Uniswap native features, but it's like they're trying to be a DeFi native chain.
Yeah, so I guess like I saw
I
some disagreement as to whether or not this is an app chain. It does seem that, well, maybe, I don't know, maybe this is just my own read on this. It seems that these new versions of L2s or rollups or whatever are becoming increasingly opinionated.
Yep.
I think maybe this is potentially a business decision in the sense of, okay, we know what Unichain is functionally designed for, trading. Now we want to leave the door open such that if it turns out that there's a lot of value in composable DeFi on here, we don't want to have created a chain that is so opinionated that it doesn't vibe with some other applications that I might want to build. I don't really know what Atlas is doing, to be honest. They don't tell me, but I think it's similar, right? It's just not an AMM, it's an order book. Their thought is, let's optimize for an order book, but obviously there is
leave the door open.
Value in composability. So yeah, that makes sense. But what do you think then about, well, you saw the Vitalik tweet, right? Unichain makes no sense, right? And everyone was dunking on him, including myself. Do you think that, what do you think? Like, do you think that this is going in a direction that maybe wasn't expected in terms of everybody launching their own chain, or no?
It doesn't seem it certainly was not unexpected specifically for Uni, right? Like people have been theorizing about the Unichain for a long time.
Right.
I think maybe what he was alluding to is this idea of like Unichain as a pure app chain play doesn't feel as logical, because it's like, okay, I have to bridge over there.
Defend your master.
I have to bridge over there to swap and then bridge back.
Yeah.
Like what's the point of that? Like just deploy Uniswap on my general purpose L2 and like swap there. Like kind of being an external liquidity layer as a pure kind of app chain thing doesn't feel as logical, because you do break that composability, like you said. I think there's some amount of it that also feels like, especially around the Uni staking, it feels like the natural way to just like kind of give value to Uni holders without actually doing that much. Like if you actually look at the staking design, it's really weird. I mean, so there's one person sequencing the blocks, right? It's this TEE person that's run by Flashbots. They're going to try and decentralize it, but that's a soon TM type of thing. So now you say, okay, how do we give Uni holders something to do with their Uni? We tell them to stake. But what does staking mean? It means you can attest to the blocks being produced by the TEE, right? So now what happens is the TEE, every 250 milliseconds, it pumps out a block, or every second, whatever, the sub block or full block. And you as a Uni staker have to vote that block is valid and follows the ordering rule that everyone agreed upon. But you're laughing, and I'm laughing because you're attesting to something that you have no control over, right? Like someone else is deciding if that attestation is worth anything. And it's kind of like, what value is the attestation adding to the world? It's like, you can say, oh, now I know that the Uniswap holders that are staking are not going to double sign on two conflicting blocks that are produced by some exogenous process, which is like the TEE thing.
And it's like completely blinded as well.
Yeah. So it's like, you can look at that, like they call it a fast finality layer, which means, okay, finality
yeah.
is a really abused term, but what it means is functionally like, I know that if 2/3 of the uni stakers sign a block, then that block will not be signed by 2/3 of the same uni stakers. A separate competing block will not be signed by 2/3 of the same uni stakers. But like that as a confirmation rule is just a very janky thing. Like no one actually cares what these random uni stakers are saying is the truth. Like they care about what Flashbot's TEE says is the truth, and they care about what like the updated state on the chain is. So unless I'm missing something here, it feels to me like that meme where there's like, like a giant tank and there's like a water coming out of it and the guy comes up and slaps on it and it's just it's like uni token value and it's just like slap staking on it. Like that's kind of what it feels like.
Yeah, but that makes sense. Yeah. Well, okay,
then
like
that's maybe too cynical. Maybe
zooming out though, do you? And this obviously kind of ties into all of the rest of our conversation as well. But do you view this at all as an indication that the L1 is not supporting its applications? I mean, you hear like Hayden is very diplomatic and I think conscientious with his words in terms of, well, like there will still be Uni v4, you know what I mean? But I do wonder if this is sort of, there's increasing pressure that, the L1 is not supporting these applications and they will increasingly launch their own chains, and they will. The thing is, it's a purely business decision. It's not like rocket science here, right? Like clearly they think they can make more money launching Uni. They can keep more of the value to themselves by launching. And there's nothing wrong with this. I'm not like saying this in a derogatory way. I'm just saying it's like obvious, right? They can make more money launching a chain and doing this themselves than paying L1 validators, right? They're going to be paying a fraction of that. So does this like concern you at all, or you just see this as the continued proliferation of ETH the asset?
From your tone, I think it's clear which side you're on.
No, I don't.
So I think it does feel like the pretty natural extension of the roll-up-centric roadmap, which is, hey, we're actually pushing people to deploy elsewhere, whether or not they're deploying on a general purpose L2 or they're rolling an app chain or whatever. It's kind of like that's what the messaging has been for a long time, and that feels kind of consistent. Whether or not that's like totally correct, maybe is less obvious. I will say, like, in terms of the business decision thing, it definitely does feel like, I think John had this meme where it's like you launch as a dApp and then you get big enough, like if you acquire enough market power to be a dApp, then you become an app chain. And if you like acquire enough power to be like an app chain, then you become a general purpose L2, and then you go all the way to the L1 thing. And so I do think this kind of circles back to the whole market structure of L2s, which is like, if economic power accrues to one entity in such a way that they don't need any of the other pieces of the puzzle, they can just be standalone, like vertically integrated thing, then like, I think if there's value on the table, like they're going to do that.
Dude, it seems to me... Sorry, go ahead.
Yeah. I mean, the huge black pill for me, actually. So Stephen Goldfeder went on Bankless like right after I was on there talking about the ethicist thing. And it was actually like kind of jarring because he used the analogy that Ethereum will end up being like TCP/IP. And that's like super mega bearish ETH. Like, because I just, TCP/IP is just so inconsequential in terms of accruing value. It's like, it's similar to Linux, right? Like, I know we're reasoning by many analogies here, but it's like, these software standards and, software implementations and stuff can generate or can facilitate like trillions or many trillions dollars worth of value, but not actually capture any of it themselves. And like, if that's Ethereum and it like does serve all this like external L2 block space, but captures literally zero of the value, then maybe
that's bearish ETH the asset, but that may be bullish consumer surplus. That may be bullish welfare.
It may be like good for social welfare.
No, it is. I'm serious. Like, this has long been like, Sometimes I'm more direct about it, saying it than others. But like, that's what I was saying. I think that Ethereum can provide a tremendous amount of value without it necessarily capturing a lot of it. And I think that, but the thing I will say, and this is sort of a counter to, Kyle Samani, or maybe like Tolly is a better one, saying that, I want Sol to be the 100th biggest asset. And I do think he believes genuinely in the app layer. The thing is, though, if you believe that these things should be competed down to the margins and they are like effectively worthless beyond their marginal cost of production, right? If you believe that, there's no reason in my mind to think that that doesn't also apply to the app player. It's like, so this rationale where it's like, oh, it doesn't matter what Solana's worth, what like all the apps are gonna be worth a ton. I'm like, dude, if it's really good app, somebody will fork it and provide. Yep. It's the same. It's all open source software, right? This stuff is uniquely bad at seeking building outsized build. Yes, and I think that's what we want. Ideally, right? It just doesn't.
We want there to be no moats, like a moatless world,
right? That doesn't fit with a lot of people's bags, obviously. So they have like, this is contentious there. Okay, last thing.
I think just to follow up on this one last point, I think this kind of circles back to the original thing you said, which is that maybe the only like fish worth trying to catch is the moneyness thing, is the store value.
That's what I think. Yeah,
it's like if all of the, and this is actually kind of bullish rollup centric roadmap, I think, more than bullish L1 execution, which is Ethereum is trying to do the SOV thing and not necessarily trying to do the capital asset like yield bearing thing. So
no, definitely. I mean, what you really want is an agreed upon. You want the world to agree upon a store of value. Like that is, that's what I was saying at the beginning. That is what I have to. Sure. You want it to agree. Yeah. That this is first and foremost a store of value, and there's path dependency to that, right? Like then you optimize for decentralization and credible neutrality, and right, and you export the asset property elsewhere. Rights. And there can be very robot property rights. There can be, like if you're using kind of this model, there can be very high velocity on these other layers. But in aggregate, if people view this primarily as a store of value, that's where I personally believe like all of the value accrues. Okay, last thing we got to talk about, since you work a lot on it, MEV. I don't know where to start. Like I see Beaver's building a lot of the blocks. What's the MEV? What does the MEV landscape look like right now?
Yeah, so I would say there was two big changes recently in terms of market structure of builders. First was actually a very positive one, which is Beaver stopped censoring. Can I ask? Do you have any idea why that is? Zero insight. Okay. I have no idea.
Wait,
it just
hang on.
happened.
Let me ask: did the relays start censoring again?
Not that I have.
Okay, maybe I'm wrong. I'm probably wrong.
No, I don't think so. Right. So that was kind of number one, and then number two. I'm not sure on the order of these, but they happen approximately at the same time, which is rsync kind of Wintermute stopped building blocks functionally. And I think part of that, so like right now, if you look at Relay Scan or whatever, it's basically just like Titan and Beaver splitting, 40-40 or 45-45. I don't know. Again, this is kind of speculation, but I imagine rsync is still market making and still doing ARB stuff, but through one of the other two builders, probably through Titan, because they're kind of directly competing with SCP. So those are two big updates. I don't think either of them is like, obviously having two builders instead of three seems optically worse, but it just doesn't seem that different. Yeah. And the like relying on two builders for censorship resistance of the chain also doesn't feel like a big W. Like we're not going to take that one to the bank for like and rely on that for the long-term censorship resistance of Ethereum. So I'll say like neither of them feel too much like a new stable equilibrium or anything like that. In terms of the general things around MEV and Ethereum, I think another piece that Max has been pushing, and we kind of touched on it earlier, is this whole multiple concurrent proposers thing. And it actually directly can be compared to separate proposal that came out after we were doing all the inclusionless stuff at the beginning of this year, which is called Fossil.
Yeah.
And so I think everyone's kind of in agreement that the end game of block production, that's kind of what we're thinking of this as. Like, how do blocks actually get produced? There's going to be like some sort of co-creation, right? You need people with different views of the world, different views of the mempool, different like jurisdictions, different perspectives to contribute to the construction of a single block. And there's kind of like a number of ways to do this. One of them is Fossil, one of them is concurrent proposers. So I think I'm very excited about the state of the research in that direction. It feels very promising. And Fossil is one of those EIPs that I think is going to be a no-brainer slam dunk once it's like fully researched out. Everyone's just going to be like, yeah, this has to be the next thing that we do. In terms of MEV in the ecosystem, well, okay, another thing that is worth mentioning here is it seems like enshrined PBS is actually going to happen relatively soon. For a very kind of, I don't know if it makes a ton of sense from first principles, but there's a lot of support behind it from the all core devs, and it seems like it's going to happen just because there's people who want it to happen, not because it's like first principles, the totally correct thing to do. The version that they're trying to implement, so I guess maybe for the audience, enshrined PBS is taking MEV Boost. MEV Boost is this relay that takes place is this auction that takes place between the proposers and the builders. It's facilitated by this relay. And so historically, the main thing that enshrining PBS is trying to do is allow that fair exchange, is allow that auction to take place, but without the use of the relay. Like there's no trusted third party in the relay. You just use the protocol as the trusted third party. The version that's getting implemented effectively has the builder's stake in the consensus layer. And the builders effectively builders are now visible, and you can have them commit to a payment to a proposer before they actually produce the block. So that's how you kind of do this commit reveal thing. You have proposers say, I want this builder to build my block. The builder makes the payment before they actually produce the block, and then they produce the block once they know that they're not going to get reorged out of the chain effectively. So yeah, we'll see what that actually does. I don't think it'll change things significantly because you can still use the relays instead of that protocol thing. And so, we wrote this post in July of last year, like ages ago, which is called Relays in a Post EPBS World, which is just making the same argument, which is if there's no like market demand for this thing that you're putting in the protocol, like no one's going to use it. And people are pretty happy with MEV Boost right now from the staker and the builder end, right? Because builders get access to like 90% of Ethereum blocks, and the stakers get access to like the top 2 HFT shops that are like building super valuable blocks for them. So I don't think there's market demand to get rid of the relays right now. And so I don't think it will necessarily happen. But it's some big change that could happen in the next 2 years. So it's probably worth mentioning.
When you say that the relays will still exist, potentially, even with EPBS, explain the incentive to still use a relay versus the EPBS system?
I think the incentive mostly comes from the builder side, which is builders care about having super low latency with the proposers, and because they need that last look on the Binance price right before the builder proposes their block. And secondly, they want to be able to cancel bids. And bid cancellations are super important because if the price moves against you and you made a bid earlier in the slot, then you need to be able to cancel it. This is just like HFT normal market microstructure stuff. So yeah, I think for those reasons, how the relays are like, you can make the argument that like, okay, you take away the relays and the builders now geo-distribute and co-locate with some of the proposers to get really low latency and stuff like that. But my point here is that the relays are kind of already doing all that work on behalf of the builders. So like, why would the builders are functionally already vertically integrated with the relays. They run in the same data center with like a high-speed link to the relay box. So it's kind of like removing the relay is more like in name than in actual practice, something that would change. And so I don't think there's that, like, I think the default here is super sticky, which is that people, and another big thing here that's super sticky is totally worth mentioning is how do validators decide where to get the blocks from? They have to run on their command line like an endpoint that says, I'm running MEV Boost and I'm trusting this relay. And it's a lot of effort to go through and like reconfigure your system. Like I am running it on my own box and it like took me forever to figure out like how to hook all this up. And so
solo staker.
And so if like
You don't build your own blocks?
well, I did for a while, but now
Oh man.
I set them in bid. So I have I have a reserve price. It's 0.05 ETH. So the block has to be worth more than that for me to externalize it. But anyway, the point I'm making is like to get all of the validators, there's currently 1 million validators. 1 million. That's a lot. But to get all of them to reconfigure to use a new endpoint that is the builder's endpoint instead of the relay endpoint takes like a lot of switching costs. Like there's a very high effort there. And I just don't see, unless the builders decide that they're not going to play ball with the relays anymore. And then it becomes like, I can only get the high value order flow directly from the builders themselves. If that's the case, then people will do it. But if builders are still fine sending the blocks to the relays, I don't think, I just don't see the demand for enshrined PBS. I mean, we should just ask the two builders, honestly, like, hey, if we enshrine, just ask Kubi and ask Lev. Like, it's not very hard to get a hold of them.
You're not allowed to say his name.
Kubi shall not be named.
What do you think of a lot of the murmurings about private order flow, wallets, builders? What are your thoughts?
The likes. I mean, I think it's
going to happen.
It's going to happen. It's already happened.
Yeah.
I mean, what Consensus and MetaMask do is they run this like OFA thing for everyone to play in. Like, I think getting as many market participants for the order flow aggregators themselves is going to be incentive aligned, right? Like they want as many builders competing because a competitive builder set is going to mean they have like higher prices for the things that they're selling. So I think in some ways the market forces are actually working in our favor here, which is the people who create the order flow want as many people searching against it as possible, meaning like there should be some competitive pressure there. But again, this all kind of feels, it's almost like water under the bridge when there's only two builders. It's kind of like it doesn't actually feel that like it changes the market structure very much to have two builders with their own sources of order flow versus two builders with the same sources of order flow. Like they both kind of feel equivalent in my mind. So I'm not sure like centralization of order flow on one of the two builders is that existential of a problem or anything like that. But I don't have too much more to say there. I guess it feels like the order flow stuff will probably end up getting aggregated, and like it's just going to be kind of what everyone looking to the same source for order flow and getting it, which seems okay. I guess I would be curious if like for the Robinhood example with PFOF, because all of these things like effectively look like PFOF, right?
Mm-hmm.
Like if Robinhood sold directly to Citadel versus running a batch auction every 2 seconds between Citadel and Jane Street or whatever, like is one of them better for users or worse? I don't know if you have any intuition there.
No, you'd have to ask Nis Lobin or somebody like
one
that.
of our market microstructure friends.
I guess it seems like it's probably better for them to compete. I'm just the thing like just zooming out just in general about my views is like the thing about just like MEV on Ethereum is like I think it's very, very hard to figure out a way to stop deals that happen off chain. And that's where I think it's an inevitability. And I just don't know, that doesn't seem great. Do you, the other thing too, well, I don't know, I guess maybe like Fossil probably attempts to address a lot of this stuff. It may be pretty far off, but one thing that I think is worth coming back to is, for all intents and purposes, the builders now, Beaver and Titan, are generally ecosystem aligned. And one thing, you can take some of this MEV stuff to the extreme when you get regulatory clarity, and Citadel is here, and SIG is here, and you start thinking about how much money they have. I think that is where I'm like, right now we're kind of dealing with actors that are probably not going to do anything to intentionally screw over Ethereum. Don't you think that Beaver and Lido do have incentive to team up in some capacity? And the same with Beaver and Coinbase, and to get kickbacks in some form or another. Like that, the incentive is there, right? And PBS, you could sidestep this and off chain in some capacity, right?
Just have Beaver build all your blocks, for example.
Yeah.
As Coinbase. Like you just sign a B2B deal, like, hey, for the next month, you're going to build all our blocks, for example. Is that the thing?
I guess you can still opt into the PBS auction, but when when Coinbase is validating, then which you don't know in advance, right? Like the builders don't know.
2 epochs in advance.
Okay.
So like 12 minutes ahead of time,
So Beaver knows 12 minutes ahead of time that Coinbase will be the validator. Okay.
Correct.
So they can just overbid there, right? And have a deal where they could consistently just overbid for Coinbase's blocks and then get a kickback on the other side, right? That's like theoretically possible.
If you're going to do that, then I don't even see the point of Coinbase participating in the auction in the first place. Like, why don't they just let the highest, just do it off chain and say, okay, we're going to self-build, but our self-building blocks we're sending a request to get the latest block from Beaver. You know what I mean? Like, well, what's the point of playing in the auction if the bids aren't real? Like, as it stands, there's no requirement that you participate in the auction as a proposer. You can opt out and just say, I'm going to self-build my block. But if you have a deal with Beaver as Coinbase, then you can just say you're self-building, but really just get it, outsource it still kind of off-chain and produce the block. And
do you think that's happening?
Fine. No, because we can check now, and most of the blocks still do go through the relays. So yeah, I guess if you're asking if people could obfuscate through the relays by overbidding and then having a kickback on the back end, yes, they could.
I remember I interviewed Stefan, and he said, maybe this was the impetus for this. He said that he thought there would likely be deals between builders and validators by the end of the year. And I don't know what exactly he was implying there, but I guess that was my intuition, was what I said, although it doesn't seem to have made a lot of sense.
Well, no, okay, I guess it's worth just outlining what's the problem with that. I guess if a builder and what's the problem with vertical integration generally? I think the bigger fear is that you use your vertical integration to do things that are kind of outside the bounds of the normal PBS mechanism. Like if you control 2 slots in a row, then both the validator and the builder are incentive aligned in trying to screw over the LPs, right? So you just censor all the Uniswap transactions for the first block, and then you do all of the ARB on the second block, and you double the length of the slot because you have 2 proposers in a row. And that type of stuff for sure is very bad and potentially incentive aligned for the validators and the builders, because they're taking money from some other participants in the ecosystem, namely the LPs and the users, for example. Now, if they have a deal where they're vertically integrated, but they're not doing stuff outside of the normal behavior pattern of PBS, I don't think it's actually that big of a deal, unless you think they're trying to price out other builders and lead to a monopoly in building or something like that. If they're trying to say we're going to acquire enough block space that we can have higher returns on investment than everyone else and try and dominate 100% of the blocks, then yeah, maybe that's the scary outcome. Because then once you have monopoly pricing power, then you start rent seeking and stuff like that.
Yeah. So I think this is also, maybe I'll use Solana as an example here, but so as not to be too critical. But I think that if you take like Samani's view, right? That the value of a blockchain is it's the MEV it generates, right? Fees, like this is his. I'm working off of his principles, right? The value is in extracting MEV. Who is good at extracting MEV? HFTs. What's the incentive to validate then? Or who are the people validating HFTs? Okay. When you take this to an extreme, it's that there's 3 people validating Solana blockchain, Citadel, XTX, whatever, right?
Insist.
And if they have a direct line to order flow in some capacity, then they can start rent seeking and monopolizing in this way. The most extreme, so that was the extreme. The extreme is that because here's what would be the counter argument. Okay, well, if they start censoring, for example, then people will delegate their stake elsewhere. Okay, first of all, there are probably not that many firms that can make as much. So, like, you would undelegate because you're going to make less. Okay, probably not. But that would be, I think, Tolly's argument is that, well, as long as it's a competitive environment, right, somebody can come in and outcompete and like rent seek less than Citadel. But here's the thing: the extreme is that they just don't sell you the stake. That like, and then that's sort of this like maybe leaning into this like proof of authority thing. Like if they have some monopoly where they have like very very high margins, they can just say, yeah, no, like we have enough stake that you'll never be able to compete. And that's where it gets like, I think, more more scary.
This is a really, like, this dovetails really nicely into one thing that I did want to bring up, which is one structural advantage of Ethereum.
I was going to say proof of work is that you can always plug in, but go ahead.
That too, but the existence of a lot of unstaked ETH is a very powerful lever here, which is if something like this does happen, there is kind of like capital that can come in and kind of counteract like if 80% of ETH gets acquired by one firm and then they're building all the blocks and staking all the validators and you're kind of toast. Another interesting thing here is kind of circling back to Samani's argument. I totally agree with you that like if you do live in the mental model of like MEV is the only way to value a blockchain, then I don't think that actually that MEV being captured by the sole stakeholders is actually that likely. As you said, like it's going to get captured by the searchers, by the HFT guys. And so it's like, then you should actually like be pretty worried about the value prop for any of these chains, because like you're not going to, I mean, I guess they say like, oh, they'll pay 10% of the rewards to the validators to keep the chain alive or something like that. But it just doesn't seem.
Yeah, I mean, I think I would say in this like dystopian vertically integrated scenario, first of all, I don't think that MEV is going to be worth a tremendous amount in 10 years, personal opinion, right? Yep. So like oftentimes the argument with these crypto discussions is, well, we're going to grow the pie so much that even with less rent seeking, it's going to be so valuable. And I'm like, and also there's a lot of like hilarious thing. Like there's so many things now that, you know, we can put on chain, and it's like, okay, maybe it doesn't mean this is worth a lot. So I tend to agree. Like I'm sitting here, I'm like, okay, dude, this doesn't make Sol more valuable than ETH because like it's probably not going to be captured, right? But the one thing I would say is it may end up a lot of it captured by validators, but it's going to be 2 or 3 validate. Like there's like, it's just going to be a really small group of people in this
super
scenario.
Top heavy there. Yeah.
Super. And that's more the concern. Like and this is what I was saying, like, oh, you're going to undelegate your stake. Well, why are you undelegating your stake from Citadel? They're really, really good at what they're doing. What like random little Russian hacker is going to come in and be able to provide a better service than Citadel? Like, come on. And especially with regards to Solana, and like maybe why I picked Solana for this analogy is like, this may end up being the case faster with a chain like Solana on the grounds that it is very fast and MEV heavy. But yeah, that is one thing I think I probably agree with Samani about a lot of things. Maybe even valuing a blockchain on its MEV is intuitive. It doesn't mean that it's a lot of MEV. There's also potential regulatory reasons that it may not be a lot of MEV, because
100%.
there could be a lot of countries that come along and say, yeah, you can't do that anymore. Like,
you can't just front run people.
I've noticed you've been stealing from people before and after their transactions, and we're not going to allow that. And like, it's pretty, straightforward. So I think like trying to predict the long term from what we see now in anything crypto. Also, this applies to Bitcoin's transaction fees, by the way. I thought I'd throw that in there. But trying to predict anything right now. Safe. Yeah, exactly. Like there's so little like to glean, in my opinion, from the current state of crypto for like its long-term equilibrium. And in fact, it almost must be that way, because if this is to succeed, we have like what? 0.1% of the world onboarded. Like, we better hope we're early, right?
Yeah. Some big structural things need to evolve to make the experiment worthwhile. Yeah.
All right. Did we not cover anything? This was awesome. Anything you wanted to touch on? I mean, like, I know you had this absurd list here, and we mainly touched on it. It just ended up being a lot more conversational, like I expected. So, is there anything that we left out? Yeah. Well, Mike, thanks. It was awesome, and I do appreciate you coming on. I think that, I mean, I wouldn't say like put you in the hot seat, but probably am more adversarial than you're gonna get on like Bankless or something, right? So I do appreciate you being willing to come on. It means a lot.
No, thanks for having me. And yeah, I think these types of discussions are super important. You're a good
voice. You're a good voice for the Ethereum community.
You're a good voice for the Anons.
The shepherd of the Anons. Appreciate that. All right, thanks, dude.
Yeah, peace.